Hey, what's going on, everybody? Welcome back to another video. In this video, we're going to break down my top 5 favorite ETFs that have a dividend growth streak over time and proven track record history of year over year growing their dividends. So if you're an investor who either has to spend all their dividends or spends most of them or has difficulty reinvesting them because they are taking and withdrawing dividends, these are 5 ETFs worth looking at. As always, this is not financial advice. This is just my own opinion, but we're going to start out here, guys, with HDIV, which should be no surprise if you're familiar with HDIV. It's got a current yield of just over 10.5%. And HDIV is one of these higher yielding ETFs that honestly, it's hard to find anyone talking bad about HDIV because it's got such great performance. You guys can see here total performance inception of over 17.5%. 1 year of close to 34 and 3 years of over 23%. Year to date, 33.8. So HDIV is pretty unique. It's got a good mixture of Canadian financials, some covered calls, some not. It's got US tech, it's got energy, it's got the new Daymax ETFs from Hamilton mixed in there. So it's got a very unique blend of everything. But when we're looking at dividend growth, you guys, we're just going to pretend you're an investor who bought HDIV back in 2021 when the distribution was just shy of 12 cents per unit. So let's say you bought it then and you bought in needing to spend these dividends to live, or maybe you put them into another investment. Either way, guys, if you would have bought in 2021, 5 years ago at 11.75 per share is your dividend. Today it's 18.30. So you got a huge dividend increase. And by the way, those increases happened year over year, regardless of what markets were doing. You got your increases. So even if you spent absolutely everything, you still came out with dividend growth, even if you didn't reinvest money back into this fund to grow your income naturally grew over time. HDIV, definitely my number one pick for dividend growth, higher yield dividend growth. Next up, guys, is HYLD. HYLD could be considered HDIV's brother or sister. This is more tilted towards the US market. So it's also got some great dividend growth. We're going to go back to inception. It started out at 13.75, moved to 14. There was a little bit of shakiness with HYLD. They went through some changes, moved their funds in-house. So there was a bit of time where the distributions got kind of shaky, went from 14 to 12. But for investors who, held their ground and stayed invested, you went from 12 to 13 pretty quickly, and then from 13 upwards. And as of today, you're sitting at over 15 cents per share. So long story short, guys, if you were an investor who bought in at 13.75, that was your monthly dividend, you still would have got that increase to 15.30, as well as the price appreciation along the way, and that nice dividend growth over time to grow your income. Even if you didn't reinvest anything back in, your income would have still grown. QQCL, this is an ETF from Global X. It is leveraged as well, and this is trading on the NASDAQ 100. This is a pretty popular ETF, and this one has some good dividend growth as well. So we're going to go back to 2023, where their distributions were 25 cents. They stayed steady at 25 cents all through 2024, which is great. If you're an investor needing to spend that income, absolutely nothing changed in 2024. And then 2025 is where we see some nice dividend growth up to 29.5. One choppy month in May, and then that nice increase to 31.5. That's some pretty good growth. 31.5 from 25. That's like over 6 cents per share. Pretty good in 2 years, in my opinion. Even if you didn't reinvest, your income would have still increased. And USCL, same thing, guys. Another Global X fund. This one is just on the S&P 500, and we go back to 2023 when it was about 23 cents per share. 2024, you stayed stable at that 23 cents. And then 2025, you got that increase to 25.5. And, it's kind of been hovering around that 24.50. But, again, guys, still 24.50. Still an increase from 23. Nothing's changed. Even if you sold, or even if you spent all of your income, you're still good. You still own your shares. You still got a small dividend bump along the way. And finally, guys, HTA from Harvest. This is a very popular fund. This is a concentrated technology fund. So all the other funds we just looked at were diversified kind of indexes or proxy indexes. This one's just 20 tech stocks, large cap tech stocks, but it's very popular, close to 800 million AUM, current yield of just under 9% with monthly dividends. So we're going to look at the distributions here on HTA. And if we go back to 2015, you would have been expecting a monthly dividend of about just shy of 6 cents. Now, this has stayed stable in 2016, 2017, 2018. Absolutely nothing changed. You would have been collecting those dividends month after month. And then 2020 and 2021, we start to see their dividend increases. And then really the last couple of years, I would say the increases have been very noticeable, all the way up to now 14 cents per share. So if you were an investor in 2015 in this fund and you spent all your income, your dividends have more than doubled, as well as this fund has some really good share price appreciation because it's just large cap tech companies who have just absolutely blown up, right? So probably a great investment for people who held on to it since 2015. You probably got an insane yield on cost, but this fund definitely makes part of the top 5 in my opinion. They've also got the leverage version, HTAE. It was difficult to kind of choose between this and QQQY. They've also got dividend growth as well, but I'm just going after the top 5. Just my opinion. I know that there's more out there. Now, we'll look at a couple honorable mentions, in my opinion, as well. EQCL could have made the top 5 as well because they do have a growth history of dividends going from 19 and a half up to 21 in 2024. And then in 2025, we went from 22 to 23 and a half. So, if you were an investor in EQCL in 2023, 19 and a half, you would have went now to 23 and a half. So still spend your income, still gave yourself a pay raise, even though you didn't reinvest. One of the reasons I didn't put EQCL as a top 5 is because I've got a problem with EQCL's AUM, and I don't know why. They've only got 50 million net assets, and I'm not sure why this ETF isn't more popular, but I've actually personally had problems buying and selling this ETF before. I wanted to get into it. My brokerage was basically saying there was liquidity and volume issues. So, an ETF with only 50 million in assets, it's just, for some reason, it's kind of stagnating. I think it's slowly growing, but it's very, very slow. And another honorable mention, the only reason that this one didn't make the top 5 is because we don't have that performance for the 1 year, but we will at the end of the week. HHIS, you guys know, steady 25 cents, and it bumped it up to 26 and then to 27. And that's awesome for a high yield fund like this, going from 25 to 27 cents per share. We'll see what else this fund does in the future, but I wasn't honestly even expecting a pay increase like that. So HHIS, love this ETF. It just wait until that performance history comes out. And I think that once that comes out at the end of the week, you're going to see HHIS starting to get stacked up against a lot of other funds. And I'll be very, very curious to see what that performance looks like. And then finally, guys, Canoe EIT. Canoe EIT, it doesn't actually have dividend growth because they haven't changed that monthly dividend like in a long time, like, I don't know, 10, 15 years, maybe more than that. It's always been 10 cents per unit per month with a current yield of about 7.4%. However, Canoe EIT can be a good anchor because they do have that stable price growth. You guys can see this is today out in the market. There's some choppiness going on, and Canoe is just still trucking along. They're up 0.68% today. So their share price growth and their NAV currently sitting at 1672 In my opinion, it's a great anchor for a portfolio. What you might be giving up in dividend growth, I think you're getting a share price growth out of that. So it's kind of like a wild card in this video, I guess. But my if I had a crystal ball, I would say that this fund eventually will increase their dividend, because as that growth continues and that yield gets pushed down, I would just assume that that dividend eventually will have to get bumped up. We'll see though. Anyways, guys, those are my top 5 picks for dividend growth ETFs. Number 1 has got to be HDIV. Absolutely love this fund. But if you're an investor who's spending all the income and you still want that safety and peace of mind of dividend increases, even though you might not be able to reinvest as much as some other people, these would be 5 worth looking at, in my opinion. As always, guys, not financial advice. If you watched this whole video, thank you. Please leave me a like, leave me a comment, and I will see you guys.